the demand is there. It's probably softened a little bit, I think, as people have been a little bit shy, particularly in Melbourne. I think the demand is still quite solid in Brisbane and also Sydney. But what's interesting in terms of the real estate market is how well it's held up in terms of sales. And I think if you're a developer looking at this year, I think the biggest focus you would have is actually, can I sell the stock once I build it? Can I actually get pre-sales? Now, I think back in March, April, I think everyone was quite concerned that the residential real estate market could suffer a lot. And I got to say, I remember sitting at home at the time when we were using Teams and just looking at what the latest CoreLogic figures were each week in terms of auction sales. And I remember in those times they were talking about auction rates, clearance rates rather, falling to 50% or below. And everyone was quite pessimistic in terms of outlook. Personally, I was actually surprised that anyone would be buying a property during COVID. I mean, times were so dire that I just couldn't believe that there would be any clearance whatsoever. But there was, and I've got to say it's jumped back since then, following on from action by the RBA, but also the stimulus which was seen from the federal government in terms of JobKeeper. And that's provided a big fillip in terms of confidence. And we've seen that being borne out by the Westpac Consumer Confidence Reports which have come out. And as a result, we're seeing, in terms of the loans that we're providing to borrowers, that they're getting consistent sales. And in terms of sales overall, look, at times they might be 5% above valuation, they might be 5% below valuation, but there's been quite a consistent return. And we're seeing loans in our book continue to repay. Probably the only surprise, the only outlier has been slow processing by banks. So where you'd see typically your mum and dad get funding to buy a property. In the past, they'd get approval within 10 days and they'd be able to settle within 30 to 45 days. We've seen that drag out. So that's now 60 days or so. But I suspect following the stimulus, but also the aftermath of the Hayne Royal Commission, there's more certainty and return in terms of responsible lending laws, that we're going to see that time frame starts to decline as well. In terms of the product offerings that we have, our aim is to provide an income return to investors. That really is our primary focus. So to do that, we have a number of product offerings which are designed to meet a diversity of investors out there. At the top of the list is the Trilogy Enhanced Income Fund, which has as its assets cash and cash-style investments such as government bonds and investment-grade securities, with an exposure also to the Trilogy Monthly Income Trust. Additionally, we have the Trilogy Monthly Income Trust, which has as its assets loans which are secured by first-ranking mortgages over real estate across the eastern seaboard of Australia. Currently, we've got around 85 different loans within that portfolio, ranging in value from $3 million up to $20 million. Now, on top of that, we have some closed property syndicates. That's where we've bought property. Over time, they're sitting within syndicates, which generally last from between 5 to 6 years. And lastly, we have the Trilogy Industrial Property Trust, which has a portfolio of industrial properties, and that's currently providing a rate of return of 7.8% per annum. And that's paid monthly to investors. Just to give you an idea of the current rate of interest in that type of product, we recently did a capital raising of $18 million to buy another property. We did that within 7 days. It was a fantastic result.